Well, let's look at the general reporting season coming up. Joe, we heard from Ross Barker before. He believes it's going to be relatively dismal given the economic shockwaves both here and overseas in the last 12 months.
Well, it's hard to see it being otherwise. I mean, we're going to have some downgrades from some of our big miners.
Yep.
The banks have already told us their outlook, but I think because the outlook for the resources is much grimmer than it was a couple of months ago.
BHP alone's interesting. The analysts previously had a $22 billion forecast for BHP. I think it's down to 17 billion now.
Yeah.
And as we know, analysts are typically very optimistic when it comes to earnings. By the end of the year, they get pretty close to getting it right. I'm really interested in the outlook statements for the next 12 months. I think they're going to be pretty bad. That will put pressure on prices. But what I know is that CEOs read the same newspapers and watch the same programs as us. And so if they're bearish in their outlook, they may be late to the party, and we may even see a turnaround in the next 12 months in the market.
And of course, a real sleeper for BHP, just want to look out for it, spent a lot of money, multiple billions in the US a couple of years ago buying companies like Petrohawk. Now, a lot of people are saying those acquisitions now need to be written down. That could really smash BHP's earnings. Admittedly below the line, but it will be seen as a big earnings cut in any case. Which
would be a good opportunity for BHP to have that buyback that they've been sort of putting off.
At a cheaper price, maybe.
At a cheaper price.
Exactly.
Yeah, as early as their results announcement, do you reckon, or they?
I don't know, but there's definitely pressure on the company to do something.
What about and we all get the odd nasty surprise in reporting season. Obviously, companies will put out earnings warnings in the last few weeks. Roger, do you expect
Fortescue Metals Group, they're the most leveraged to the iron ore price. Yeah. If we continue to see pressure on iron ore, then what we'll see analysts start putting out their sensitivity analysis reports. They do that around this time, and we may even find. I think on our early numbers, if the iron ore price drops to about $70 a tonne, then the economic rationale for Fortescue Metals Group existing comes into question. So I think we'll see some of that, and that could see prices fall.
And Tom, what are you keeping your eye on, in particular, any particular sector as we enter earnings season?
Oh, well, you can find arguments why they'll all be absolutely terrible. I mean, I think that the banks have probably come a downgrade. Resources we've spoken about. Retailing, we already know, is doing it very, very tough at the moment. But having said that, there's some very good defensives in the Australian market. I mean, the supermarkets, as we heard earlier, are doing well.
Telstra's doing
really well. There's just no bad news out of Telstra for the time being. So, on that sense, I do think it's going to be more of the same. There'll be good and bad. But I do...
Safe haven buying of arguably some mediocre businesses.
Well, it's already happening. I mean, look at Coca-Cola share price. It's gone through the roof. Telstra, they're all doing incredibly well because people want to know that at least they can park their money there and get it back in a few months' time.